we are discussing the who will pay the corporate tax and on what they will pay the corporate tax. So this is the first point in terms of definition. The corporate tax definition: paid by corporate tax paid by taxable person on taxable income according to tax period. So that normally is a 12 months, but it may increase or decrease also. Now, so let's see the taxable person. Let's understand the taxable person. Is all the companies or all the individuals are taxable person or no? So certain people who will pay tax, even the taxable person, but not all will pay the tax. Certain people who will not pay the tax. When we say, okay, the basic definition: tax paid by the taxable person on taxable income according to tax period as per the tax rate. But now only the word of taxable person itself have the more complex understanding and legislation, how it gonna work. So let's see. So taxable person, will discuss in detail this topic, taxable person itself, in the next slide. But so far, let's see taxable person. This is the one. Then we will say the exempt person. Two. Then we will say the out of scope person. Each one have the further detail. Each one have the further detail. So we will dive into the detail as well. So taxable person, normally we say that 10 exempt 10 person. How many? 10 exempt person in total. Who are the exempt person? We will see. And they even some person are not exempt person. Real estate companies, they will pay the tax. Insurance companies, they will pay the tax. Banking and financial institution, they will pay the tax. So this is the exception that we are sharing here. Banking and insurance, even they before the corporate tax, they are already in the taxation. This corporate tax is the not the first tax in the UAE. Still, many companies or institute, they are paying the taxes before that also. A hotel industry, they are paying the municipality taxation, that is the 10%. Oil and gas industry, they are already paying the oil and gas natural resources taxation. Similar, the financial institution, they already paying the taxation. So now corporate tax is applicable on all of them, or some of them, and some of them exempt from the corporate tax. We will dive into that and understand. Now again, the natural person versus real estate company, this is the also one of the key factor, because the UAE, they are giving the advantage to the real estate investment. They are promoting the real estate investment. So now if the natural person owning the real estate properties investment, subject to certain compliance, he will be out of scope. He will be out of scope. Versus the real estate companies, the same property owned by the natural person is out of scope. Same property, if under the ownership of real estate companies like LLC, is subject to tax. Is subject to tax. Anyhow. So exempt person, who are the exempt person? The government entities, government control entities. This is the government entities. Each emirates, they have the government entities. Then normally we are familiar with the government entities. What are the examples? Immigration, we can say the government entity. Municipality, we can say the government entity. And there will be some government controlled entity. Okay, some entity, they are doing the business, but ownership belongs to the government, the control. The word business is very critical. So I will say that some government controlled entities, they are doing some activity, is subject to the government function. It will be it may come under exemption. But the business is another definition. Even the government is doing the business, it's subject to the taxation. Now, the next we mentioned the extraction. The extraction and non-extraction. This is belongs to oil and gas or any other natural resources. If the broader term is a natural resources, if the oil and gas, mostly we are familiar, even the gold also in the Ras Al Khaimah, some mines are there, they are extracting the gold also. So this extraction and non-extraction is a very important factor for our understanding. Extraction directly who drill in the sea or in the land and pull the natural resources. Non-extraction, there are two functions whose discovering and pulling, extracting the resource or the oil and gas from the sea on the land, and second is processing to the next level, refining at commercial level and proceeding. Then the next is a qualified public benefit entity, qualified investment funds. So pension and social funds, family foundation funds, these are all itself, they have 40 minutes or 50 minutes learning in this. Here we are discussing the overall, but we will dive in detail and understand what are the details of this topic with the applicable regulation also. Our so far, whatever we are learning based on the applicable rights, UE regulation. Now, the government entities and government control entities automatically exempt that are specified in the cabinet decision. If we talk about this, they are automatically exempt. Automatically exempt means they will not register for the corporate tax. The difference, automatically exempt, but not all the person are automatically exempt. Some they have to apply for the exemption and apply for the application. Ministry of Finance, the second, what we said, the extracting and non-extracting. Next is extracting and non-extracting. So this extracting and non-extracting subject to Ministry of Finance. Because if they approve by Ministry of Finance, then it may, how they approve? They'll say, okay, we are already paying the Emirates level taxation, and this is the approved, and this is the confirmation. Then they apply for the exemption from the corporate tax. Now, the difference, how it will be exempt person, automatically or exempt. The qualifying investment fund. The qualifying investment fund, again, mostly is correlate to the real estate, mostly, but still certain criteria is there. Family foundation or trust. This is the one of the form of the UIP, unincorporated partnership. But the family foundation by nature is a LLC. The word LLC may be not appropriate. I will say the legal person. Legal person. But they have the option to apply to the FTA and get the unincorporated partnership application, and then they will not subject to taxation. And this is, we did in the last week of the September, where FTA was very active to respond, and we appreciate the FTA effort as well. The client came up in the last week, and we prepared set of document, and we're submitting, they're raising the query for the information. Within 1 week, they approve this. Within 1 week, we submit the application. In next 1 hour, they will raise the ticket. Okay, this is the further supporting document is required. And now let's see the next. Yeah, the same, the detail we will have the on the, because this is the overview what we are discussing, but each of them will have the 1-day session. Okay, here one thing, the public qualifying benefit entity, this is the FTA must be issue the list. not all the companies or the charity organization meet this criteria. Previously, they issued for the VAT list, the list of organization who's approved. If you are giving the donation to that for the corporate tax exemption purpose, is only accepted, only the accepted. Apart from that, if you given the donation to any other, this is not the deductible expense. So here, yes, the public qualified benefit entity, they are subject to application, meeting the certain criteria and rules and regulation. They also will be exempt person. The pension fund, the private pension fund, if they are meet all the criteria, it also will be exempt person. Now let's see the taxable person income. So far we have the understanding. Let's all summarize. The taxable person, we are saying the taxable person detail, we are understanding the first category. Under the taxable person, subject to tax person, exempt person, the definition, what I'm saying, the taxable person, subject to tax, exempt person, then the out of scope person. This is also very important, the out of scope person. We will understand some person itself. Here we are talking about the exempt person. Here we're talking out of scope person. The tax is not applicable if they are within the same criteria. So now the definition we learned about the taxable person, paid by taxable person. Then we said the taxable subject to tax person, exempt person, out of scope person. Now the second part, as we know, is three part. Okay, in terms of the definition, we're saying the three part. So the first, the taxable person, next is a taxable income. So let's understand the taxable income. What is the taxable income? Same as we under taxable person, the subject to tax and the exempt, same taxable income, exempt income. This is one of the element as per Article 22 of City Law. For some of the participants asking the legal references, so please, it's built in on each stage. So I believe you're gonna see that now. This is City Law. There is a 4 deductible items. You will see in detail also. Okay, the next slide, the complete detail will be there, but let's focus over here. The taxable income, exempt income and taxable income. Exempt income will be exempt and city will pay according to the tax period. So now, as we mentioned here, the next slide for the exempt income. The exempt income itself is a complete topic. But today we are covering only the small part as a part of understanding of the corporate tax definition. So what is shown here, this is not will be covered, but as a legal reference, if you want to see, this is the legal reference is already shown. But taxable income as per Article 28 adjustment in the accounting profit. How many adjustment? 8 adjustment in the accounting profit.